Hi, everyone. Welcome. Thanks so much for joining us today. Let's wait maybe 2 more minutes for other attendees to join. Meanwhile, I will let you know more about what we're going to talk today. And first, please write in the comments, where are you from? Which country? What type of business do you run or you work with, or in which niche you are? Because we want to understand your needs better and make this session as practical as possible for you. My name is Elena, and I'm marketing manager at Vendo, and today's webinar is about VAMP. VAMP is Visa Acquirer Monitoring Program. It's already impacting some of the businesses, so we wanted you to stay compliant, protected, and help you grow. So in today's session, our speaker, Fernando Latorre, he's Director of Merchant Solutions and Payments. We'll start with the presentation to break down what Visa VAMP is, how it works, why it matters. He will share best practices. He's one of the key members of Vendo's team, and he works directly with merchants, so he knows lots of different actionable insights that he'll share with you today. So you will definitely learn from the best. After the presentation, we'll have the Q&A session, and we encourage you to drop any questions that you will have around this topic anytime during the session. During the presentation, we'll make sure to address them during the Q&A. And after the webinar, we'll send you the checklist and the recording of this webinar, so you can assess and realize how compliant you are. Maybe there is something that you are missing, and anything comes up later, we are here for you. You can get back to us with some questions, and we'll help you. All right. So I see there are lots of different countries in the chat. Great that we are so global. And yeah, I guess we can start. Fernando, the stage is yours.
Thank you, Lena, and welcome everyone. As Lena said, I'm the Director of Payments and Merchant Solutions at Vendo. And today we want to get another take at Visa's Acquiring Monitoring Program. I want to start by saying that this is a webinar that we hosted, I think it was around April, May this year, when the program was being introduced. And we had many uncertainties back in the day because Visa's plans were changing, were adapting to the realities. But it seems that now the program has been implemented. So we finally have some clarity on what is VAMP and why is it important to be compliant with it. There's still a feeling that Visa is testing the waters, so it's possible that there are future updates again. It will depend on how this program unfolds in the coming months, because we need to keep in mind that Visa needs to find a balance to work with risky businesses, since they don't want to shut them down entirely. But it's still possible that we will get some updates in the next few months. So for today, we've prepared several topics. First, we're going to look at where are we coming from and why did we end up with this new program. Then we will introduce VAMP. After that, we will dive deep into the calculations and the timelines for implementation and enforcement. Then we will take a look at some of the key takeaways and the most important remarks for you to stay compliant. We will also take a look at the best business practices for online businesses. And finally, we will have some time for a Q&A session. So I think Lena mentioned it already, but if you guys have any question during the webinar, please write it in the chat, and we'll do our best to answer them at the end of the webinar. So let's start. First thing first, we're going to look at where we're coming from. So up until now, Visa had two different programs. On one side, we have the Visa Dispute Monitoring Program, which was a program focusing on chargebacks or disputes, as Visa is calling them. This program happened at the merchant level, and the aim was to avoid excessive chargebacks. The key metric here was the chargeback ratio, and it was defined as the amount of chargebacks got in any given month divided by the amount of positive transactions that were processed in that month. This was a monthly ratio, and there was a threshold that the merchants could not surpass. And this threshold, of course, had experienced a reduction over the years. the latest figure that the merchants had to be working with was the 0.9%. And it was only affecting those merchants that were receiving more than 100 chargebacks or disputes per month. On the other hand, we also had a fraud monitoring program, the VFMP, and here Visa was monitoring fraud at the merchant level. Similarly, the key metric here was the fraud ratio, which was defined as the amount of TC40s gotten in any given month divided by the amount of transactions. Again, the threshold here was the 0.9%, but this was not a ratio, this was not a program that was affecting the vast majority of the merchants. The reason for that is that the minimum fraud amount to be considered to be eligible for this program was if a merchant was experiencing more than $75,000 per month in fraud. So the threshold here was quite high. Now, Visa is combining these two programs in what they are calling VAMP, Visa Acquiring Monitoring Programs. So Visa has decided to merge them into this program. And unlike the previous ones, VAMP is aimed both at acquirers and merchants. Visa wants to minimize the impact of excessive disputes and fraud on their payments ecosystem, and they are making acquirers and merchants share the responsibility. This program was announced back in August 2024, so quite some time now, and it was set to be enforced by April 2025. But there have been major amendments along the way. And in the end, the official enforcement date started actually in September this year. That means that Visa was changing the rules since they first introduced it in August 2024. So if you had been preparing for it, if you were ready for the April 2025 deadline, most likely you're going to have to revisit the strategies. We're going to look at a later stage in the presentation. We're going to look exactly at what VAMP is doing so that you can adapt your strategies accordingly. But for now, let's just keep in mind that there are two new metrics. One of them that is a transaction count based metric that is combining fraud and chargebacks. And the other one is based on enumerated transactions, which is a fancy word to refer to the usual brute force attacks. Brute force attacks are also known as card testing or carding, and that usually happens when there are massive authorization attempts on a merchant in a short period of time. The goal of these attacks normally is to validate if the stolen credit cards are fine. The fraudsters are going to purchase low-value products or low-value services, and they will test these cards. Visa is now making the merchants responsible for these attacks. So if you are experiencing one of these and you're not able to stop them before they reach the authorization attempt, that means before the transaction is sent to the acquirer for approval, you might be also entering the new VAMP program. So we will take a look at both of these during the presentation. But the most important one, again, as it happened with the Visa Dispute Monitoring Program and the Visa Fraud Monitoring Program, the most important here is going to be the first one, and what Visa is calling the VAMP ratio. So the count of TC40, the count of frauds, and the count of other kind of disputes. So let's look now at how to calculate your VAMP figures. And it's actually a quite easy formula. The VAMP ratio KPI is calculated on a monthly basis. And as I said before, it's merging the previous chargeback and fraud ratio into only one formula. So for any given month, the merchant needs to sum all the TC40s and all the TC15s they receive. TC40s are the fraud notifications that usually turn into a chargeback with fraud code 10.4. And TC15s are all the other non-fraud notifications that are using other dispute codes. For instance, counterfeit items, deceptive marketing, or products not as expected. From these TC40s and TC15s, there are some cases that you can deduct. Any cases that were resolved via RDR will not generate a TC15, will not generate a chargeback. So you will be able to deduct those from the numerator. All the cases that are resolved via CDRN, the Cardholder Dispute Resolution Network, one of Visa's anti-fraud tools, will also be discounted and will not generate a TC15 dispute. And finally, if you end up with a dispute, but you're able to fight it by using compelling evidence 3.0, you're also going to be able to deduct those from the numerator. And this figure, once you get your TC40s and your chargeback count, you will combine this figure and you will divide it by the number of positive transactions in any given month. And of course, well, this will tell you what is your VAMP ratio. But of course, there are some thresholds that the merchants and the acquirers need to meet to stay compliant, and we'll see those in a couple of slides. Let's take a look now at the VAMP enumeration ratio. Remember, this has to do with brute force attacks. And here, Visa is defining a new KPI, which is the VAMP enumeration ratio. And in this case, we need to divide the enumerated authorization attempts. That means how many of these card testing transactions we are submitting for authorization. And it's important that we count here the successful and unsuccessful. So these are just authorization attempts. And we need to divide this attack by the total number of authorization attempts that we are submitting in any given month. Visa is putting some pressure on merchants so that they are using anti-fraud tools that will stop these transactions before reaching the authorization stage. As I mentioned earlier, the important part in these new two KPIs is to focus on the first one, because similarly to what happened with the Visa fraud monitoring program, where a merchant needed to have a minimum of $75,000 in fraud in any given month to be eligible for the program, there's something similar happening here. And the merchant will not enter the VAMP program if unless they are having more than 300,000 attempts per month. That's a quite high number of attempts, and it's mostly only going to impact enterprise merchants. So most of the other merchants operating in the online spaces will be safe from this one, but they will need to focus on the VAMP ratio. So now we're going to take a look at the timelines and the thresholds. As I mentioned before, the original enforcement date was April 2025, but that was delayed by Visa because they were receiving quite a lot of pushbacks from merchants and acquiring banks saying that basically no one was ready and the program didn't make a lot of sense the way it had been implemented. So Visa took in all that feedback and they kind of redid the figures and the enforcement dates, and it's exactly what you can see here. So as I mentioned before, this program is affecting both acquirers and merchants, and the ratios are different. So for the first deadline, which was on September 1st, 2025, acquirers needed to have a VAMP ratio below 0.7%. And merchants needed to have a VAMP ratio of 2.2% or 1.5%, depending on the region. But let's stick for now with 2.2%. The enumeration ratio threshold was 20%, remember, from the formula that we just saw, but also take into account that you needed a minimum of 300,000 hits per month to be considered for the enumeration program. On the other hand, for the merchant VAMP ratio, only merchants that are exceeding a combined count of chargebacks and TC40s of 1,000 per month will apply towards these thresholds. The important thing to note here is that there's quite a big difference between the acquirer VAMP ratio and the merchant VAMP ratio limits. On one hand, we have the 0.7%. On the other hand, we have the 2.2%. That means that the program is more restrictive for acquirers. So any merchant that is above the 0.7% is negatively contributing to their acquirer's portfolio. This means that the acquirers are likely to disregard the merchant thresholds and impose the same levels to their merchants. Because in the end, the acquirer needs to maintain a balance of their portfolio, and if they're not able to combine high-risk businesses with low-risk businesses that are barely generating TC40s and chargebacks, they're going to have an issue, and they will impose the 0.7 limit to the merchant as well. So our recommendation here is not to look too much at the merchant ratio, but rather focus on the acquiring one. I was mentioning that right now we're on the first deadline, which was in September, but these ratios are changing in January 2026. The acquirer threshold is going to be tightened to 0.5%, and the merchant's VAMP ratio is also going to be tightened to 1.5%, not in January, but in April. But as I was mentioning, it's much better to focus on the acquirer threshold, because that will mean that you are entirely safe. In any case, our recommendation is that you ask your acquirers what their VAMP ratio is, so that you are informed and you can plan accordingly. It is very likely that you have already received some information and some communications from them, as well as what kind of penalties they will impose to this. So it is crucial here that you're able to prepare a strategy to stay compliant. Let's take a look at some of the most important remarks from this program. And the first one has to do with penalties and fines. So whenever an acquirer is above their threshold, Visa will start imposing penalties to their merchants. And these penalties are starting at $8 per case that is exceeding the VAMP threshold. So that means that the fines can escalate quite quickly. Also take into account that the $4 penalty is what Visa is imposing to the acquirer, but it is also very likely that the acquirer will add a markup to this penalty. I have seen acquirers charging anything in a range from $10 to $25 per case. So this is something that will be acquirer specific, and this is something that you're going to be able, in some shape or form, to negotiate with your acquirers to try to minimize them. Also very important to remember that the people doing the online businesses are companies, but this program is also affecting acquirers. If you remember correctly, the previous programs, Visa Dispute Monitoring Program and Visa Fraud Monitoring Program, both of them were affecting merchants. Now acquirers have a shared responsibility. So it's going to be crucial that the acquirers can maintain their portfolio below the 0.7% right now and the 0.5% in January. And again, that means that even if your ratio is comfortably under the 1.5% or the 2.2% that I was mentioning earlier, that doesn't mean that you're safe. Because if your acquirer is in the monitoring program, you will be contributing negatively to your portfolio. So most likely they will impose a stricter limit to your account. And finally, I also want to mention that being identified as part of the program is not the end of the world, but it's something that you need to take into account, and it's something that you need to have in mind to take action as quickly as possible. There's normally a 3-month grace period in which you will be asked by your acquirer to submit an action plan as to how you're going to be compliant in these 3 months. If Visa is not happy with this grace period, with this remediation program, it's still likely that they will charge the fines from the beginning. And of course, remember that these fines are monthly, so they can accumulate. And in that case, it is my recommendation again to put some work into this, to put some thought into how you're planning to be compliant with this program. Next up, we wanted to share some best practices for merchants, specifically for online merchants, so that you guys can stay compliant. And the first one is nothing new. It's something that I've been mentioning through the presentation. It's going to be key that you guys have an open communication channel with your PSPs and your acquirers. Not only asking where they stand in terms of VAMP ratios, but also asking what's going to be their policy for fines, who's going to take care of the bills. Also ask them what are their plans for VAMP. Are they planning to impose some restrictions in the way of doing businesses? Are they planning to get rid of some of their highest risk merchants so that they can balance their portfolio? There are several strategies to be compliant for the acquirers with these ratios. So again, it's going to be very, very crucial that you have an open communication channel with them, that you learn what is their situation, and that you can plan accordingly. Specifically, if you're working with more than one acquirer or with more than one PSP, ask around, because strategies might be different at your acquirers, at your PSPs, and that will also allow you for better flexibility to adapt your strategies. The second best practice is to review your product offering, especially if you are using a trial plus upgrade model or a negative option billing model. This is like to explain this very quickly, the negative option billing is whenever a merchant is enrolling a customer into a subscription where the first payment is very small or even for free. Like for instance, imagine that you're giving access to your website to one of your customers, and he's becoming a member of yours, and you're charging $1 for the first week. And after the week ends, you're going to charge the monthly membership of $15, $30 to the end user, without him having to opt in at this point. That is what Visa and MasterCard consider negative option billing. And this was a valid strategy back in the day to reduce the chargeback levels, because low value transactions between $0 and $5, hardly ever were charging back. There's a cost to process the chargebacks. So for very small quantities, issuers were not bothering to do it. But right now, this is changing, because if you are using this strategy and the customer, for some reason, is claiming fraud on it, you're going to end up with 2 fraud notifications. One from the initial payment, which is going to be a very low amount, and another one for the monthly membership. So take into account that this strategy that worked very well in the past might not work as well right now. In any case, our recommendation here is to review your fraud rate on all the products that you're offering and decide which ones are working better, which ones are helping you which ones are helping you be under the thresholds. And with the other ones, it's time to give them a thought and try to come up with some new ways to keep your revenue coming in, while at the same time you are avoiding fraudulent options. And of course, this ties in with the third recommendation, which is using fraud prevention tools. Not only the ones from Visa and MasterCard, but there's a ton of vendors out there that are supporting high-risk businesses, and not even high-risk, also online businesses, to manage fraud and to keep it under control. I'm pretty sure that your acquirers or your gateways, your PSPs will have some sort of anti-fraud capabilities in their tools. But our recommendation here is always to partner with someone, with a company that will understand fraud and will make it the centerpiece of their business. And it's very much likely that you see an improvement in your ratios after a few months of working with them. Number 4 is to enroll with Visa pre-dispute resolution tools, which are mainly 2 of them. One of them is RDR, which stands for Rapid Dispute Resolution. And the other one is CDRN, which is the Cardholder Dispute Resolution Network. RDR is doing an excellent job at stopping chargebacks. We've been using it extensively for more than 5 years now. And we have seen that the chargeback ratios are almost 0. So if you're not enrolled with this tool, this is something that we totally recommend, because you will see how the TC15 count on your numerator from the VAMP formula is going to be reduced dramatically. At the same time, I would also recommend that you enroll with CDRN. CDRN are alerts that the issuers are sending to the merchants before a chargeback is issued or before a fraud notification is issued. Again, here, the issuer will inform you, and you will have 24 hours to process a refund and reply to the issuer so that the chargeback process does not start. You can enroll on these tools directly with Visa, but if you're working with your PSPs or acquirers, it is also very much likely that they are also enrolled on these tools so that they can help you get set up much faster. The 5th one is also something that I've been mentioning through the presentation. And our recommendation here, again, is to comply with the ratios and disregard the counts. It doesn't matter if you are below the $1,000 fraud and chargeback hits per month, if your ratio is going to be at 2% or at 3%. because the ratio is what's going to matter for the acquirer. So in the end, they're going to make you liable for it, and they're going to want you to comply with the 0.7 ratio. So in the past, if you were a small to mid-sized merchant that you were not reaching the 100 cases per month, or if you were balancing your fraud between different acquirers to not reach the 100 mark at each of them, and therefore not be eligible for the program, that is a thing of the past. So our recommendation here is to stop looking at that, because even if you're working with 5, 4, 10 different acquirers and your fraud ratio is 2 or 3% at each of them, that means that it's very much likely that you will start losing acquiring relationships, and you will start getting merchant accounts shut down, simply because the acquirers are not going to be able to handle the high fraud ratios. So again, very important to comply with the 0.7 and the 0.5 ratios that Visa is imposing to the acquirers. The next one, number 6, this is specifically aimed, targeted at merchants that are doing recurring business online. So merchants that are working with subscriptions are very much in danger. It's very much possible that they are eligible to enter this program because of the recurring payments. And here our recommendation will be to follow Visa and MasterCard best practices for recurring standards. That means that you guys should always make it clear to the customers that you are enrolling them on a subscription. You need to make clear that they have ways to cancel the subscription, and you need to offer them information about their subscription. So for instance, Visa is expecting you to send an email whenever one of their subscriptions is about to expire, or whenever one of those subscriptions is about to reveal. There's nothing much here other than reviewing what are the best practices from Visa and MasterCard and try to implement them. And remember that this is specifically targeted at merchants that are using MIT transactions, merchant-initiated transactions, which can be either recurring ones or transactions that are done with the stored credentials on your platform or your acquirers. Number 7, which ties right into with the recurring standard ones, is to set clear expectations with your customers. The refund policy needs to be very clear and accessible. Same goes for the cancellation policies. Make it easy for them, and find a balance between keeping your members and not receiving too much fraud notifications. So recommendation here would be to test a couple of flows and see which one is working better for both of your KPIs. And the same is true for the subscription policies. Make it clear what is the duration of the subscription, what is the pricing on the monthly reveal, and also at what point the subscription is going to be converted from a trial one to a monthly subscription. And finally, the one that I think is also very important is that all the merchants here should be able to monitor the VAMP ratios. That means that you need to gather and you need to make sure that you're getting information from your acquirers, and specifically the information that you're looking for is the chargeback data and the TC40 data. You need to know when it's coming, from what customers it's coming, and from what kind of products, because this will allow you to build intelligence and to decide if you want to keep investing on a region or on a specific product, or if you should be investing somewhere else, because in the end it's giving you more revenue and less fraud. These would be the best practices, and there's one that I haven't mentioned, but I also think it's very important nowadays, which I would say that most of you are familiar with, but that is the usage of 3D Secure. 3D Secure kind of prevents fraud notifications from being issued, and it's a protocol that has been with us now for more than 15 years. It is widely used in the European region and the United Kingdom. It is also well known in the United States and Canada, although the throughput ratios when using 3D Secure is not as good as in Europe for some reasons based on most of the issuers not being ready to support it. But this is slowly changing, and nowadays more and more businesses, more and more acquirers and issuers are ready to support the 3DS protocol. In other regions in the world, like Latin America or Asia, it's not that popular yet, but at the same time, it's something that it's expected to keep on increasing and to keep on being more familiar. So my recommendation here, whenever possible, for the initial payments, because I'm aware that this is not something that you can use for recurring payments or other kind of merchant-initiated transactions. But if you have the ability to use it for the first payments, that's something that I would definitely recommend, because hardly ever you will get a TC40 or a fraud notification on a transaction processed via 3D Secure. So that was it from my side, and now we're going to have some time for the Q&A. So Lena, back to you.
Thank you. So we got a couple of questions. The first one is from Daniel. Can you please make a practical example of how would this affect subscription websites, tips, and pay-per-view platforms similar to OnlyFans?
So this is affecting all the online merchants in the end. It doesn't really matter if you're a usual site or if you're a fan site. As long as you're doing online transactions, VAMP is something that you need to take into account. Of course, it's even more risky for those merchants that are relying on recurring subscriptions. But the advice that I would give is first, monitor your situation, get your data from your acquirers, get your TC40 and your chargeback data, and see where your ratios are. If they are below 0.7%, that's fine, that's perfect. Nothing else you need to worry about. But if they are above, it's time to review where this fraud is coming from. As I mentioned, it can be from one region, it can be from one of your affiliates, it can be from one specific product that you have on your website. And my recommendation is that you look at what's going on there and you try to come up with ways to doing business differently, to have your customers better informed about what they are purchasing, so that you will avoid fines and penalties in the future. The way this can affect you, I would say that there are two main topics. The first one is going to be that you're going to receive fines from your acquirers and from your PSPs. As I mentioned, if in 1 month you're above the threshold, you're going to get a higher than $8 extra fee per chargeback or per TC40 that you are generating. That means that if your ratio is, I don't know, 2% and your chargeback count is 200, you're going to get a fine that is 200 times at least $8 that the acquirer will impose to you. And $8 is the bare minimum. From my experience, as I'm seeing anything between the range of $10 to $25. So that would be the first topic that will put you at risk, at financial risk. The second one is that there's a possibility that you get your merchant accounts shut down. And that means that you're not going to be able to process any transaction with that acquirer or with that PSP. This is a more extreme measure, but I've seen it happening already. It's been the case with some acquirers whose threshold whose VAMP ratio was above the threshold. And in that case, the decision that they took to be compliant was to shut down their worst performing merchants. This could put you in a harder situation because that means that you would need to find quickly another acquirer or another PSP that will allow you to process your transactions. And one thing this new acquirer and this new PSP is going to ask you is your processing history, including the count of TC40s and chargebacks. And it is very much likely that if they see that your VAMP ratio is very high, they don't want to do business with you at this point, or they will be charging you much more. So these are the two issues that you can have if you're not looking closely to your VAMP ratios.
Thank you, Fernando. We have also another question from Joanne. How will VAMP treat merchants who use multiple PSPs and route rebuilds across different acquirers? And will the liability follow the original acquirer or the rebuild acquirer?
So that's a very good point. And actually, I mean, my assumption is that most of the people that is watching us here is working with more than one PSP or more than one acquirer. The liability lies with whoever processed the last transaction. So it doesn't really matter if you started the membership at the acquirer number 1 and then you transfer the reveals to acquirer number 2. It will depend on who processed the transaction and where did you get the fraud notification first. It's also entirely possible that you get one fraud notification for the initial payment that the acquirer A and another fraud notification for one of the reveals in acquirer B. In this case, remember that the VAMP program is affecting each acquirer individually. So if your ratios are above the threshold at several acquirers, you will get fines from different acquirers. That is what I was mentioning before, that working with more than one PSP, more than one acquirer at the moment, is not enough to balance your fraud portfolio, because we're not looking at the count right now, we're looking at the ratio. So that means that both acquirers will have trouble with this ratio. And in the end, it's very much possible that you're getting fines from either. So I'm still recommending that everyone is working with more than one acquirer, more than one PSP. It's very important in this online world to have redundancy, but that will not save you from being under the thresholds. So recommendation here, monitor it across all your acquirers, and you're going to need to comply with the ratios that each of your acquirers is going to impose. And again, this can be different. Like one acquirer can be doing really well in terms of VAMP because they have lots of transactions from mainstream and low-risk businesses that are barely generating any TC40 or any chargeback. So that acquirer will be in a much better position to absorb the risk, to absorb the fraud that you are getting. And it's possible that they allow you to be under 1.5%. But on the other hand, the other acquirer that you are working with might not be as good as handling the fraud, might not have a portfolio of mainstream business to balance their fraud with it. So it's very much possible that they impose the 0.7 or 0.5 ratio to you. And in this case, it will mean that you will have a different threshold at each acquirer. So you will need a different strategy at each of them. At the same time, keep in mind that this is a monthly figure. This is a monthly threshold. So the acquirer that was doing very well yesterday might not be doing that well in the next 3 or 4 months. Fraud can escalate pretty quickly, so any of them can be in danger at any point. So again, don't be too happy if one of your acquirers is allowing you to be under 1.5%, because that might change at any point. So my recommendation here is that you have contingency plans to be below the 0.5% that Visa is going to mandate to the acquirers starting in January this year.
Thanks, Fernando. There is also a follow-up question from Daniel to the previous one regarding the websites that have subscription model. He asked, but for a new upcoming platform, what should I consider beforehand, considering it's a new business and therefore there is no data yet? We're still planning, so I would like to know the recommendations for a new one.
Right. A very important point also, because I know that there are many startups trying to find their way into the business here. I cannot give you specific recommendations because that's going to come from the acquirers where you're applying to. So most likely when you apply for a merchant account to start your business, they will tell you what rules you need to follow. They will tell you if they will allow higher transaction amount. They will tell you if they will allow people to purchase more than once or more than twice per week. So they will impose this kind of restrictions to your account, at least for the first few months, while they are assessing what the risk on your website is going to be. If you want to start with something, my recommendation is that you start by reading the recurring standards from Visa and MasterCard. You can find those on the internet, also on Visa and MasterCard websites, and try to implement the best practices that you will find there. These best practices from the recurring standards will tell you when to send emails, when to let your customers know of what's going to happen with the charges that you will be passing on to them. And of course, these recurring standards can be seen as a revenue killer. In the end, you don't want to give too many. You don't really want to make it super easy for your customers to cancel their transactions, but at the same time, you need to make them aware that they are entering into a subscription and that they are going to be tied to your billing schedule, and unless they cancel on time. My recommendation is that one. Start by looking at the recurring standards, and also start by having a very customer-centric refund policy. So if you see that one of your customers has a complaint because you billed him for something that he was not expecting, at this stage, my recommendation is not to fight with it and rather give him a full refund so that the chargeback process and the TC40 process will not start. So a combination of these three things. Talk to your acquirer, the ones that you're applying to for a merchant account, see what their restrictions. Take a look at the recurring standards from Visa and MasterCard. You can find those on their websites. And also have a super clear refund policy so that your customers that are not happy with anything are eligible for a refund before the chargeback or TC40 process can start.
Amazing. Thank you. We have one more question from Philip. Is the formula for calculating VAMP based only on CIT transactions, or are all transactions from the given months included?
All transactions are included, but you cannot mix POS sales, so offline sales, with online ones. So the VAMP ratio is only affecting online transactions. That means that, well, if you have a physical store, those transactions will not be counting for your VAMP threshold. But in terms of MIT or CIT, any kind of transaction that is processed online will be counted towards your VAMP threshold.
All right. So I didn't see any other questions in the chat. So I guess we're done with answering some requests.
Perfect. Okay, so thank you guys for being here. Just a little bit on Vendo. We're an online PSP. We like to play by the rules. We have been in the high risk industry for more than 21 years now, and we don't play small. We're here to make you successful, to make you sell even more. We're here to create long-term relationships. We're here to make sure that you don't have any shutdown in your merchant accounts, and we'll support you into turning your potential into actual revenue. We're working with different kinds of payment methods, so we can support your business with the major credit card schemes, but also with other alternative payment methods like SEPA, Pix, Pay by Bank, and Google Pay. And we can also support online stores that are run on WooCommerce, PrestaShop, or Magento. So if you guys have any question about how to handle your VAMP ratios, about how to handle your fraud, we're going to be super happy to have a one-on-one consultation with you to see how we can support you. And that's it for today. Back to you, Lena.
Thank you. Thank you, everyone, for joining our today's session. It was a big pleasure for us to talk to you. After this webinar, as we mentioned before, you will receive email probably tomorrow with the recording of the session and with the checklist, so you can go through, assess how compliant you are. If you have any doubts or concerns, don't hesitate to reach out to us through any channel that is available for you, just by responding to the email, by submitting the form on our website, or just hitting us a message on social media. We are here to support you, and yeah, thanks again and good luck.